We're going to check in now with Steve Torso from Wholesale Investor, who's been doing a survey of investors and founders in the startup ecosystem. Now, these are preliminary results, but they show for both sides right now what is front of mind is, not surprisingly, equity. Steve Torso, welcome. Good to see you again.
Thank you very much.
Okay, so these, as I said, preliminary results. You haven't quite finished this yet, but you've been surveying, you know, all of your network, I suppose. What's this key finding? What equity in terms of founders want to raise and investors?
So I suppose there's two things we were looking for, right? We want to find out from investors as far as what's happening in their world, what they're thinking about, and then also from the investors, how they're now thinking about things sort of as we're going through COVID-19 and sort of thinking beyond it as well. So from the founder's perspective, we want to understand how much, you know, when a founder's looking to raise, are they looking to raise now? Is it 12, 18 months, etc.? And we're just incredibly surprised about, you know, there's like 87% plus that are looking to raise in the next 12 months.
Well, more than 50% raising right now.
Right now, correct. And
you told me, the first time I ever met you, Steve said to me, ABR, always be raising.
Looks like people are taking that on board. The thing is, we end up doing it anyway. And I think it's, the other part to that is then you start having investors say, okay, well, what should I be raising at the moment? Because there was a lot of noise about, okay, should companies be raising convertible notes? Should they be looking for debt as a solution? Should they be raising? So we just didn't know any of that. So that's sort of why we did that as a survey. And look, what's come back to, the one that surprised me was I was surprised, the capital planning to raise 60% equity so far. And then the other one was 27.5%, a combination of debt and equity. And I thought that was actually really interesting because I haven't really seen that number sort of that high before.
So Steve, thinking about the way companies are looking at it, and I'm hearing from some that they're doing it just so that they have something for a rainy day because we don't know what's ahead. Some of them, of course, are still just getting on with building their businesses the way a normal startup would. What's your take on where the mix is sitting? Have you had a chance to drill down into that, or are they doing it for insurance purposes, or are they doing it to keep building the business?
I think you've got three types of founders. You've got the aggressive ones where they see this market as being their opportunity, you know, and you can see, and we sort of go through what investors think are the sort of top sectors of interest. You've got the other ones where they're sort of treating this like it's really in their mindset, it's almost business as usual, even though we all know it's a very unusual circumstance, but we all have to keep on sort of soldiering on in our different directions. And then you've got the other ones, which, as you said, they're going for the rainy day and they're sort of almost being protective. And I think the concerning one that I hear is from the founders that sort of go quiet and sort of trying to wait until things so-called get better before they sort of come out, which really from a market's perspective, I think this is a time when you have to be sort of most visible about what you're doing, whether your industry is being challenged or not.
There's not a lot of first mover option if that's the strategy you're taking at that point in time. Tell me, what about the investors? Are they they're not sticking their money under the bed and sort of thinking, okay, they're obviously still looking for their opportunities, and no doubt when the market's down, there are people who sort of see even more opportunity at that point.
So when we were on last time, we were talking about how what typically happens in this area is, I call it the punt money. It's terrible to say it like that, but the gambling money of the sort of 25K, 50K, 100K, where there's sort of no direct involvement with the company, that tends to sort of stop or slow down. What we're seeing now is a lot more active investment. So when we did it, we've noticed from this one specifically, had a lot more response rate from venture capital firms, different investment groups, and also family offices that were sort of active at the moment. So the other thing we highlighted that a lot of what the investors were looking for strategic opportunities as well.
And so are they swirling around health tech and sort of digital businesses that are facilitating some of the things that are happening in response to COVID-19? It's all
so the top sectors was technology and healthcare were the two top sectors, which makes sense if you think about the environment. It's pretty logical that they would be the two top. The one that was interesting for me was the third was artificial intelligence. And I think you see a lot of investors have sort of got an interest in how that can play a role going forward. The one that surprised me the most was renewable energy. Was actually fourth on the list. So, and then fifth on the list so far has been agriculture and agri-tech. And fintech was sort of in that same. So all sort of some of the ones you'd expect. The one that was surprised me, I think, was really the renewable energy area.
Yeah. Are you getting a sense on the investor side, are they out looking at brand new opportunities now? They see this as a new environment, or are they, they're already invested in a number of startups and they're looking at this as an opportunity to, grow their stake, potentially, I'm not saying, vulture capital, but, obviously, everyone's...
Opportunistic capital, let's call it.
Hunter capital, vulture capital.
People are raising at a discount, in a lot of these cases, and I think that's normal and to be expected. Are they looking at that as an opportunity to say, okay, I've got 5%, I'm going to take that up to 10 or 15, probably pay half as much as I paid 6 months ago.
I was going to say, it was interesting in the summit we did on Friday where we basically had 20 investors back to back just talking about what they're looking at. And I think there was a pretty common theme which come out from all of them, which is that obviously they are already protecting their own. And when I say protecting, they're making sure that the business are either stabilizing, they're making sure they've got enough capital, making sure they've got enough runway, and effectively making sure that they are supported in the ways that they're needed. The second part to that is then the ones that there were some that said that they are looking at new opportunities, but their bar is now higher than what it was before because their focus is their existing company. However, there was plenty of them that said that yes, they are looking at new opportunities and they're open for discussions. I think what's interesting for this environment is getting used to working online and not having a face-to-face meeting, which could change in the next 2 to 3 weeks, who knows, but hopefully that becomes more and more common. And yes, we are already seeing sort of investment go into companies in the pure online environment, which is great to see.
It is. I mean, it's hard to pitch, and I imagine it would be hard to decide to give someone money when you've not been able to sit there and have a conversation where you're not doing the, oh, no, you go first, no, you.
I think for the company's perspective, I think right now they've got to be more visible than ever because we've all got a job as founders. We've got to make ourselves go from being unknown to as known as possible. Yeah. And when we are known, that's how do you make sure that you're staying consistently in front of investors and they're seeing the updates that you're...
Just got to come on Ausbiz TV.
Exactly.
So Wholesale Investor is a business that kind of relies on a deal flow of sorts in terms of the companies are going through. What are you seeing in terms of trends there? Is it maintaining momentum, or has there been a little bit quieter? Are they smaller or bigger raises? What's happening?
No, it's for the founder's perspective. You understand, for us, we've probably never seen more companies than what we've seen in this period. And what's really interesting is that none of it's desperate capital, if that makes sense. And I think that's important to highlight. You're just seeing what happens is the founders that believe that this is an opportunity for them, or they're trying to capitalize on this environment, they're the ones that are sticking up their hand, and they're the ones that are trying to be more visible and make more noise. So for us, we've seen an increase in deal flow, but more than that, like when we've obviously had to live stream sort of our functions. Like we're seeing anywhere from sort of 800 viewers up to sort of 1,300 viewers for these streams across a period. And that's interesting, because it beats sort of, it's sort of 100 and 200 people in a room.
It really
if that
does.
makes sense.
That's amazing. Is that making you rethink how you're going to do this in the future, or is it going to be people in the room?
That's solidified my thinking about how I'm doing things in the future.
That is the future.
I agree. I think what Ausbiz does is the future. I think what the virtual showcase model is also the future. I think for companies that actually said it's really hard to communicate to a market, and when you have vehicles like this, I really think it makes a difference for companies.
Okay, so the flip side of that though is yes, you might get 10 times the number of people watching the stream. Does that translate to investments? Because I've been to a few of your events, and what happens is there's
usually
everyone
networking
does their pitch. And then people walk around and you have a coffee or a wine, and then next thing you know, you've just spoken to 5 VCs because you've just run into them at the line at the coffee. So are things happening? Do things still happen post those events online?
So when you're in an online environment, basically when you do the sort of virtual, it's the concentration of energy for that to get the view. Yeah. The reality is people are registering interest before the event, they're registering interest during the event, and they're registering interest after the event as well. So we're still seeing that normal flow-on effect with the companies. And I think it's nice for companies when they're doing a presentation at the same time, they've got anywhere from 5, 10, 15, 20 people sort of requesting access to their information at the same time. The question is how long does... Obviously, that physical environment, you can see live. The question is, how long does that take to then convert into capital? And
Yeah.
For smaller investment, it's quicker. For larger investment, it just takes more time.
Yeah, it's interesting because after I moderated an online panel for Steve the other week, I would have probably had straight off the back of that 50 LinkedIn requests of people just saying, "I watched your thing today." Just
It's crazy.
link in. Yeah.
Wow.
So people don't expect, and that's funny
There's
enough.
nothing
That
in it
is,
for either of us really. It was just
Correct.
just
and it happens consistently like that. I think every day now I have 30 to 50 requests from basically from people that either
that's
seen
because
content.
you've been on Ausbiz.
It's
You're
true.
a celebrity now.
I'm going to ask, what are you most optimistic about in the next 6 to 12 months?
Founders.
Yeah?
Yeah.
Back
I
in
think
what way?
founders and investors, I said I live in a bubble where I just deal with people that are fundamentally optimistic. I literally have not had a conversation outside in my business world where someone's in tears or just if you look at the resilient nature of founders and how they're turning this into opportunities for themselves, I think that's something that the entire market should be proud of and have confidence in, that whatever circumstance is going on, the people that make up this country and this business environment are the ones that are going to drive forward regardless of what's happening.
Fantastic.
It's a great note to leave it on. Steve, thank you.
And I think
Thank
the
you.
lesson there is, if you do have punter money, don't put it on Winks at Randwick. Sort of stick it into these companies.
Just come visit us.
Yeah.
Yeah, there you go. Give it to a startup. All